Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. I'll give you my financial opinion. We're going to work our way through DXY, yields, precious metals, and then onto commodities that I follow. If you guys need any help, definitely sign up for the finding-value.com Platinum membership. We're actually at some spots that I think could potentially be good buy points for some of these commodity companies. And you don't get these opportunities that often where you get kind of a real good entry point. You're getting positive signals from the market. And that's the time I usually go in. So anyway, let's dive in here. Let's take a look to see what's going on. I'm going to start with the DXY, which is the relative strength indicator. That's what I call it. It's the dollar, its strength relative to other currencies. And again, I'm in the camp that this can go up. We've broken to the upside of this pattern. It's a falling wedge. And I do think that this could go higher for whatever reason. You could say it's recessionary fears. You could say it doesn't matter what narrative you put to it. The news will put whatever narrative and spin they want on this thing. What matters is how are people positioning and voting with their money. And we saw that the size of the pullbacks are getting smaller. We got a little fake little, I call that a slingshot, and I think we're going to head higher here in the short term. I don't expect this to be, higher forever. I mean, it could. I mean, we've got some massive deficits. We're going to have to release quite a bit of debt next year to cover all of the spending and higher interest rates, which is the interest on the debt. I mean, there's going to be a lot of issuance of bonds, and I do think that dollars could go up. The relative strength, I should say, could go up. Weird as that sounds. We got the 10-year yield. The 10-year yield's broken to the upside. We've come on back. I do think that the 10-year yield's going to go higher over time. And the reason I think is when you have to release all this debt, you're going to have a lot of buyers for that debt. And it's going to be interesting to see how the end of a credit cycle works in the markets, because everyone's looking at these markets from the old paradigm that, the 1970s when we had 30% debt and all this other stuff. We have a large demographic coming into retirement age, collecting on a lot of, I'll call it, obligations. And it's going to be, I think, inflationary, and a lot more debt's going to have to be absorbed by the markets. Unless they do QE, quantitative easing, to bring the yields down, I think that yields are going to remain elevated. TLT bond prices flat. You could say that this is kind of a little pennant formation that we could break to the upside. We entered it from the bottom side up. There's your flag. It's just, or pennant, I should say. TYX also dropping a little bit today. This does look like it's trying to bottom. We have wicks at the bottom here. I do expect this to potentially go higher. We've broken the downtrend line there. So let me put a better downtrend line there so you guys can see that. There we go. There we go. And I think we could potentially go higher there. What does that mean? Higher interest rates. The markets do not like that. Higher dollar, higher interest rates, markets puke rolling over. They don't like it. And the TYX, TNX just moving sideways to mostly sideways. What that means is that the curve is uninverting to some degree. It's falling and uninverting a little bit. And usually, I mean, it's just going sideways, but usually when this goes up, that's when gold and silver do very well. When it goes down, gold and silver does not like doing that. So the CRB index down slightly today. I still think this looks fantastic for a move higher. We've got a falling wedge, broken to the upside, retest, and we're probably going to see a move higher. We're at a resistance level coming down this way, a short-term resistance and a big long-term fat resistance that goes all the way across. Let's take a look to see where that resistance goes in the long term for the CRB. It's this big guy. And we've traded there a few times in this general vicinity there. So there's a little bit of stickiness as we come down into it. It'll support us as we come down. It'll be sticky as we go up. CRB to S&P 500 actually up quite big. So this falling wedge did work, and we're heading higher. And that's with commodities kind of holding their ground better than the overall markets. You can also increase your purchasing power when two things go down. Yes, you have a loss in dollar terms, but you actually can buy more of other things. So if you're in an investment and it goes down, I'm just going to make a percentage up 5%, but everything else went down 90%, you are richer. You can buy more of all of those things that have declined by 90%. The cool thing is you didn't even have to pay taxes because you can mark a loss. That's the beauty of it all. Now, gold, I put this in here. I put a little circle on where I think it could potentially go. Again, we're playing with statistics and probabilities. We had a very large down day today, down $29. We have an ascending wedge. We're breaking that to the downside. We'll see if we get a return move. And maybe, bigger picture view, we do a shoulder, head, and then a shoulder. And this point doesn't mean it has to go to that point there. It very well could come up here even. It doesn't have to be exactly the same as the other side over here. But this would be a great buying opportunity, in my opinion, if we get down there. Huge buying opportunity. Silver also selling off quite a bit, 3.6%. That's pretty much a shellac in there. We do have strong selling pressure. And the one thing I'll say here, if you were to try to identify this before it did it, we had a large selling pressure day here, and then you can see all these small up candlesticks. A lot of the times, that means that the buyers are kind of getting tired. And it's about to reverse. This is our reversal candlestick. So I do think that we could potentially head lower in the short term following gold's lead. This very well could be a shoulder, head, and then maybe we get a shoulder of some sort going on the right-hand side. It's hard to draw that. And then platinum also down today. I mean, we could draw a line through here, kind of like through that. We're going on that uptrend line, and we're basically getting some resistance through this area here. Which way is this going to break? I'm undecided, especially with gold and silver heading lower like that. I would expect platinum to follow suit, although the chart still looks okay. It doesn't look great. It just looks okay. So, would I be buying at this exact moment? Up to you on what you want to do. But we could break to the downside, get a better buying opportunity. If it does that, I'm going to buy some. That's just what I do. I wait for the market to present itself with good buying opportunities. But I don't think you're losing buying in any of these physical metals. So here's XAU to gold ratio. The mining company sold off greater than the metals itself. We are bouncing around. Still not broken out. This is a resistance support line there that we're at. GDX down 4.4%. That's a larger selling pressure day. And there we are bouncing off that resistance line. You could throw a little guy up here and you could say that this was kind of coming up and squeezing up and we've broken to the downside just like gold itself. I do think that this will potentially head lower in the short term if gold wants to head lower. SILJ is also selling off. It was matching the silver down move roughly. And we are down today. It looks like we've kind of broke through this support zone. Maybe we squeezed up and popped out a little bit there. Either way, I'm not going to do anything different. I'm holding on to whatever I've got. Crude oil down 1.4%. Could this be considered a bloody nose? Yeah, it's a little bit big. It's a profuse bloody nose, perhaps. We could be hitting this kind of resistance support level through here, and we broke out above it. We're doing a retest today, and we could head higher on crude. I know a lot of people think that this recession's coming, that crude should go lower. Crude oil is definitely not a spot known for a place to be during a recession. But we also have a weird dynamic where oil has been controlled to the downside through strategic petroleum reserve releases, through COVID lockdowns. There's a lot of things happening in the background, and I'm still a crude oil bull. I think it could still go higher. I think this is also going to be the root of future inflation. We've got natural gas up about 8%. This is some volatile action, guys. We are going back and forth with the buyers and sellers in this entire area. Massive up days, massive down days. Which way is this thing going to go? I know we've got some cold weather coming up, and I still like natural gas. And when you think of the companies, I know a lot of people think this, the companies are going to make obscene amounts of money at $7 a million cubic foot. So even though the natural gas price is being volatile, and even though people think that natural gas has to go up for the companies to make more money, that is not a true statement. If natural gas just stays above $5 a million cubic foot, you're going to be making obscene amounts of money as the hedges roll off of these companies. So as those hedges roll off, they're going to make hundreds of millions, maybe even billions, depending how big it is, more dollars per year. So the game isn't that we have to have natural gas go up. The game is to keep it elevated. That's where they make all their money. XOP, slightly higher. It does look a lot better than what it used to. So we saw a large selling pressure kind of move here. And we have an up day today, 0.42%. Yeah, it doesn't seem like a lot. So what, 4.2 or 0.42, right? But it was during a huge sell-off of the entire market. And I think it looks really good here now. Today is showing me that this thing is strong. And I like it. I like XOP, yeah, you know me. So OIH, energy service companies, it was down today, but the momentum is heading back up. We were down 0.71%. I think that energy service companies on a long-term perspective look good. They look very good. There's your chart here. The breakout, we're getting a little wick at the bottom for the month. And I think that it looks fantastic for a long-term hold. And I know people, they get real antsy because something isn't moving up immediately. These things, if you're an investor, you're not worried about things moving up immediately. You want to get good buying opportunities, good entry points, and then hold on. And the volatility is going to be there, guys. But we're in these sectors because of the volatility and because of the returns that can potentially come. So the Sprott Physical Uranium Trust, I actually think it looks better. Yeah, we're getting buying pressure on a massive selling day. That is decoupling. We still have these ugly down candlesticks back here and here. So we could see some more sideways action or whatever, but I would be on the prowl looking at uranium companies and maybe looking at some doing some false breakdowns or something like that, where if you're an aggressive investor, you could add a little bit. But again, that's not financial advice. That's up to you on what you want to do. But that's probably some things that I would be doing I'd be writing down the names and then watching them for a good entry point. URNM down 2.24%. Is this thing done? Man, this is a flag pattern. It's inverted, and we're probably just going to come back and we'll see where this thing ends up. We could do a false breakdown. As long as we hold above $55 or so, I'm not too concerned yet. So, and it's not a huge down day. It's not like we just got whacked. It's holding on. TAN down 3%. It doesn't look too bad. It's not a reversal candlestick or anything. Still looks good from a long-term perspective for a move higher with that bloody nose on the monthly candlestick. Copper getting that little bloody nose. It's bleeding too. So I wrote this in yesterday. I said, this does look like we're getting a little wedge that's coming up where we could break out to the downside. I left it in there from yesterday. It did break lower. Is this something that we should panic over? No, guys. If you're going to panic buy, and that's not advice. I'm going to be panic buying when we hit in this region that we're at. So think of the way that this thing comes up is usually the way that it fell. We could come back to that level back in here of $34-ish. But we've got shortages out there, guys. There's deficits in copper. And I think that Copper is an excellent spot to be hiding. Now, copper generally is not a good spot to be during a recession. And that's where it gets difficult. We're going to have volatility like no other. Copper is a signal, if it goes down, that we're going to go into recession. But with the deficits out in front of us, I don't know how that's possible. Looking at lithium, LIT. So lithium heading lower today. If you take a bigger picture view, I do think this could potentially head lower. Big picture view, like big picture, I think we could even head all the way down to 40-ish. Now, there's a negative and a positive here. The negative is we could go back to 40 and we're at 64, or come back down to the 50s. If I throw a fib extension on this and see where it could potentially land, down here is $48 at a 0.618. That is a possibility. It could even go a little bit below that in the 40s. I say that because if you look at the candlesticks here, you've got massive selling pressure all through here. And we're getting it again, and the overall markets are looking kind of weak. I haven't been a buyer in LIT. I haven't, said anything. This is kind of an ABC correction or something, or maybe I drew a little bit wrong there. ABC correction, where we end up somewhere down there. But I will say, the positive thing here is this is one massive fractal. It is absolutely ridiculously large. So if I were to throw a fib extension on this, and let's say we get down to like 49 or 8 or something, a lot of the times this goes up, and again, we're coming from the bottom of 40-something dollars down here. I think the third leg could be pretty big, and we could go to 260 all the way to maybe $300 potentially. Again, we're playing with statistics and probabilities, and that is what I'm seeing potentially. So we'll see if this thing continues lower. We'll see if this support line holds. We're right at it. But with the overall markets looking as garbage as they do, I think we could see some lower numbers in front of us. REMX also heading a little bit lower, down 4.95%. It looks like it's coming back and touching the support level. It does have a little wick at the bottom. This is the big support level. This could still head lower. We've got selling pressure still in this thing. It's showing us today that it's not as sturdy. What I look for are small candlesticks. I want to see strength in the face of overall weakness. This is trading a little bit lower. Again, we're still above support though, so it doesn't look horrible. Now the S&P 500 sold off. We're talking about this rising wedge, and that this could be kind of like a double-ish top. And I was expecting, are we going to break higher or lower? I said, statistically speaking, we should be breaking lower. We've gone lower today. It didn't finish right at its bottom, but it doesn't look that great. So we could see further downside, especially if we see stronger dollar and stronger yields. And the Nasdaq's doing the same thing. We're rejecting this resistance level and heading lower, and we can kind of put that support area there, and we are below it. So if we see continued selling pressure next trading session, if we come down like this, I'm pretty sure this thing's done. You can stick a fork in it. EEM, it's pulling on back. I do think that we could pull back here into the 36 level. It doesn't look bad though. It looks all right. XHB, actually surprisingly strong today, only down 0.6% in the face of all of that selling pressure. And we have momentum coming back up. So that still looks actually quite good compared to the other sectors. MOO, the VanEck agribusiness, looks like it wants to head lower. This is a little bit more expensive than the other guys, but when looking at it from a ratio perspective, I do think this could potentially head all the way back down here for MOO, doing a full retest of that big base breakout. This is a very large fractal, not as big as LIT's, but it's a pretty big fractal. We could see this really launch as this finishes. This is a bearish engulfing on a monthly. It does look pretty bearish at the moment, where we could potentially head lower. Copper, we're right at that resistance level. We're going back and forth. We've got a lot more selling pressure today. Fears of recession. Copper is a signal that a recession could potentially come. So we should watch this, see what it does. If I were to kind of draw something in here, so let's say we draw it like this, and we draw kind of like that. And what we have is a flag pattern that could potentially head lower in the short term. The channel here is the flag, and then your poles there. So we could break out of this to the downside if a recession is coming. And that's what a lot of people think. We will see it in the charts here. This still is a battle between the buyers and the sellers, but that is a possibility. Lumber holding actually quite strong today, minus 0.86, but basically flat. We've got iron ore looking strong, given the overall landscape with the markets. And I do think this is breaking out to the upside there. And I do think we could see iron ore go higher with the opening of China. So that looks good. Aluminum down a little bit, but I still think this thing looks ultra strong. Big base, the breakout, the retest, and it's already sat there and did the retest. So aluminum, I think, is going to go higher. Baltic Dry Index is breaking to the upside. I think that's going to go higher. So we've got iron ore, aluminum, and a lot of these metals looking pretty good outside of copper. And then Newcastle coal futures look good to go higher. They still look all right. We are contracting down a little bit. There's some resistance through here, but we could break through that if it decides to break. And definitely we'll see that. And then with the recessionary fears and the overall market selling off, Ethereum and Bitcoin. I know I'm not an Ethereum or Bitcoin guy, but it's a measurement of liquidity in the system. And right now, people are afraid. And that's what it's measuring. It's showing us that people are afraid and that we're getting a little bit of selling pressure. It still doesn't look bad, though. It still looks all right. So overall, guys, I think oil looks the strongest, natural gas and oil, compared to everything else. And everything else is looking a little bit weak today. I do think that some of these could pull back even further than where we have. And there's the potential for an ABC correction for lithium and MOO and some of these other ETFs where we could pull back a good bit. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. Check out the website, Platinum membership over there. And if you guys need help, we have a 5 p.m. Mountain Standard Time Sunday question and answer session for all the Platinum members. You can go and ask any questions you want. I know I do a lot of technical analysis. That's kind of what I like seeing because it tells us what people are doing with their money. And it can usually tell us something before it happens. And I'm a long-term investor. I'm not a short-term trader. I do not do the trading in the short term. I mean, every once in a while I might throw something on, but I hold through what I think has really good fundamentals. And then I use technical analysis to get the entry points, and I use ratios to figure out where the best areas are to invest. So that's what I've got for today, guys. Hopefully you're doing all right, surviving through this kind of sell-off here. And we'll catch you next time. This is Finding Value.